Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10 a.m. this Wednesday morning here in Metro Manila. We are about 30 minutes into this trading day. Let's kick off with our top story. Remittances hit a 7-month high in the month of July. That is as more OFWs sent more money to support their families amid the health crisis. Money is sent by Filipinos working abroad through banks rose 7.8% to $2.78 billion. That's from $2.58 billion a year ago. This is the biggest amount since December's $2.9 billion. July also marked the second consecutive month of growth. The Bangko Sentral said the growth is buoyed by the increase in land-based workers' remittances. Security Bank Chief Economist Robert Dan Rosses says the growth momentum in remittances could be a sign that this year's slump will not be as bad as expected. ING Bank senior economist Nikki Mapa says the depreciation of the dollar could also be one of the reasons for this improvement, but he notes that remittance outlook for the whole year is still affected by the pandemic, particularly by the OFW layoffs. More than 174,000 OFWs have been repatriated as of September 12th. Meanwhile, separate data from the Bangko Sentral show that net FDI inflows also sustained growth. Inflows rose for the second straight month in June to $481 million. That's nearly 20% higher than $402 million in the month of May. The BSP attributes the growth to gradual reopening of advanced economies and the Philippines' sustained macroeconomic fundamentals. RCBC's chief economist Mike Ricafort says the reopening of businesses in the country amid easing restrictions also contributed to this momentum. Let's kick off the markets report with a quick health check on our local unit. Take a look at my Bloomberg terminal here. Healthy indeed is our Philippine peso. That's at 48.37 to the greenback. That's on the back of having already strengthened yesterday, climbing on this improved surprise, so to speak, remittance print and also the FDI figure. So take a look at that. Meanwhile, you're going to be seeing crude oil, that is the blue line, actually getting more expensive. That's up by 1.15% to $38.72 per barrel. So for today, Mike Ricafort, he is of course the chief economist of RCBC, is expecting the peso to range from between 48.30, so we're climbing towards those levels, to 48.45. So very tight range there versus the dollar. Whereas Carlos and Sean of Union Bank sees the local currency moving up to 48.40 only. So again, very strong showing here from our local currency. Let's take a step back and take a quick peek at how the equity markets over in Wall Street performed overnight on Tuesday. You're going to be seeing them enjoying another session in the green, with the Dow Jones up a bit flattish though, but the S&P 500, the benchmark index, up by 0.5%. That's a third consecutive session in the green. The Nasdaq as well enjoying those gains. That was up by 1.2%. Now, what's going on today over in the U.S.? Recall that we are all waiting for the Fed Reserve meeting, and that's to gauge the extent of the central bank support over in the U.S. for the economic recovery. Analysts have said that on the back of those expectations, crude oil actually had extended gains. However, still, trade issues between the U.S. And China continue to simmer. You've got the latest on that, the World Trade Organization ruling that the U.S. had violated international regulations by imposing tariffs on more than $234 billion worth of Chinese exports. Quick peek here at how Asia Pacific is doing and whether the tide of green is moving over into our continent. More or less, except for China, as I'm seeing here on my terminal, you're going to be seeing Japan opening in the green. The Topix up by 0.2%. Hang Seng flattish, but more towards the upside. But take a look at Shanghai and Shenzhen. Those are down by 0.3%. Taiwan enjoying gains of more than 1%. And the FTSE Straits Times over in Singapore up by 0.3%. Let's take a quick at our own local markets. I had checked that earlier just right at the open, and we had fallen back, unfortunately, below those 6,000 psychological levels that we had already breached yesterday. And take a look at your screens here right now, still trading at that level. We're at 5987.36. That is a slump of 0.5%. And this comes after, I'm just going to take the 3-day chart for you guys here so that you can see how we had finally breached those levels. We were climbing towards that 6,000 mark yesterday, and we were unable to sustain that. You can see that V shape, let's say, or N shape here the past 3 days. So very, very volatile sessions here. But this, according to AAA Equities, is Chris Van, he says that this uptrend may actually continue and persist towards the end of the week. He says that the market's movement in that direction may actually be the calm before the storm. That's as the economy continues to bounce back and more investors will be coming into the market. He does say that in terms of the economic downturn, the worst is over. It seems that worst is still not over for investors, at least in the first 30 minutes of trade, and we'll be waiting to see whether this stages a comeback later on in the broadcast. Now let's take a quick peek at the sectors that are dragging down our boards this morning, and whether they're just specific stocks or big sectors in general. You're going to be seeing industrials, the most sold off this morning. That's down by 1.3%, together with holding firms down 0.9%. Properties as well. Only one bright spot here, very interestingly, financials. That was up, but it's now actually paring back those gains, but that's up a touch by 0.01%. Now, speaking of financials, just want to take a quick peek at those banks we've got, especially now that there's a lot of debate on what's going to be happening with the central bank. They've got 3 monetary board meetings towards the end of the year. Governor Diokna has already said that he's not going to pull out the trigger for another rate cut towards the end of the year. He's going to let the impact of the 75 bips actually feed through the system. But this, according to IIF, so that's the International Institute of Finance, they're saying the government should prioritize measures to contain the coronavirus pandemic, with the BSP likely done easing policy to stimulate the activity. So they have said that the central bank has done its part in terms of monetary policy, and now it's the government's turn to actually arrest the further spread of the virus. So again, they're saying likely to keep the policy steady for the rest of the year. Now let's take a quick peek at some stocks to be watching out for today. Let's kick off with Dennis Oi's Udena. So I'm going to take a quick peek at Chelsea Logistics and also Phoenix Petroleum, which are the listed entities of Dennis Oy. They are now applying to actually explore 2 petroleum blocks over in the West Philippine Sea under the government's energy contracting program. So the Department of Energy actually earlier on in the week, so that's around late Monday, had opened bids to explore the various oil blocks in the country, and Udena has now nominated 2 blocks over in the Recto Bank. Now recall, this is not their first venture into gas development. They actually won the 45% interest of the Malampaya plant there. That was the interest of Chevron earlier on. So they're now partners with Shell and PNOC in that exploration. Apart from Udena, another one that is also looking to explore more is MVP's PXP Energy Corp. And they have actually nominated an area number 6 with an area of 1.432 million hectares. So just taking a quick peek here at, let's take a quick peek at Phoenix Petroleum and whether that has actually been impacted by this news of Dennis Oy looking to explore even more oil. I recall that Phoenix is, of course, a distributor of oil here, but let's take a quick peek. Not really moving right now. It's at 10 pesos and 96 centavos. Now let's move on over to telcos, which is of course another space that Dennis Oy is very much interested in with their Dito Telecom. This, as the DICT has cleared 23 firms to start building common cell towers. So you're going to be seeing on your screens here which are these 23 tower companies. So the DICT has issued provisional certificates to these tower companies, allowing them to own, construct, manage, and operate common towers which are holding cellular sites. Now recall, of course, that we've got already PLDT that was already approved earlier on. They've announced secondly on Tuesday that their wireless arm Smart Communications has secured a total of 211 permits already to date, and they're also having pre-construction permits for the towers that they will be building, not just in Metro Manila, but in 20 other provinces. You can see on my screen here PLDT down by 9 pesos. That's down 0.6% this morning. Globe Telecom down by 0.2%. And Dito Telecom also sliding by 0.6%. So not a very good morning for the telco incumbents at least, and the new third telco player. But speaking of telco, I just want to take a quick peek at one stock that is making waves abroad, and that is of course Surtech. They have actually gotten Kintel. So Kintel USA is their subsidiary over in the US. They've gotten a contract to provide antennas to a telecommunications provider over in the US. So they have not named who this telco provider is, but according to some sources, that will be used for 5G rollout over in the US. There are reports that this telco operator will be spending nearly $1 billion this year. Now, recall that Surtech had already actually gained quite a lot, even ahead of this news. There was already some speculation on that, and it was actually up by 7.3% already yesterday. Let's just take a quick peek at whether they're sustaining those gains, and take a look at that 8.7% gain in just the past 3 days. Surtech now trading at 6 pesos and 22 centavos. So more markets later on in the broadcast. Okay, guys, let's check in on the biggest headlines we are watching. Today is Wednesday. The Asian Development Bank sees contraction worsening, not just here in the Philippines, but in the developing Asia region as well. The multilateral lender expects the region's GDP to shrink 0.7% this year. That's its first negative growth since 1962. This ADB outlook is a downgrade from its previous forecast of a 0.1% growth. Now, ADB chief economist Yasuyuki Sawada said the economic threat posed by COVID-19 remains potent, and that extended first waves and recurring outbreaks could warrant further containment measures. The Philippines currently has one of the most longest lockdowns in the region, that's now at 6 months, as cases continue to rise. The ADB said apart from the pandemic, worsening geopolitical tensions, including the trade and tech war between the US and Beijing, could also dent growth. You can see on your screens here, the ADB expects China to buck this downtrend, keeping its outlook at a 1.8% growth, whereas India is seen to shrink by as much as 9% this year. And as we reported yesterday, the ADB sees the Philippine economy contracting by 7.3% this 2020. That's much worse than its previous forecast back in June. The Manila-based multilateral bank sees a more protracted L-shaped recovery for developing Asia. That's as it forecasts a 6.8% growth by next year. This is still lower than the pre-COVID-19 predictions. Now, this from the Philippine Star, the NFA is set to beef up its procurement of unhusked rice, that's palay, to ensure stable prices and more income for local farmers. Department of Agriculture Secretary William Dar, who also chairs the NFA Council, noted that the agency will provide transport services to farmers who cannot deliver their produce to warehouses. And if needed, Dar said the NFA will pick up their produce in designated areas in their respective barangays. The agency said they will continue to buy palay by as much as 19 pesos per kilo, adding that they called on the top 12 rice-producing provinces to help the NFA buy palay directly from their farmer constituents to help stabilize the prices. Land Bank has meanwhile released 12 billion pesos in loans as of the end of July to farmers of high-value crops. That's to boost the government's efforts to boost the industry. This is under the Sulong Saka program, which was availed by almost 1,000 borrowers from 72 provinces, and a majority of them are small farmers, fishers, and cooperatives. Land Bank President and CEO Cecilia Borromeo explained that crop diversity is essential to achieving local food security amid the ongoing health crisis. The Philippines has secured another loan that's worth 50 billion or 23 billion pesos from Japan. Now, this is the second tranche of the post-disaster standby loan agreement, which was signed by Finance Secretary Sonny Dominguez and Japan International Cooperation Agency's chief representative Eigo Azukizawa. The DOF said the fund will support post-pandemic programs that will boost the health sector and other industries crucial to economic recovery. The loan, which bears a fixed interest rate of 0.01%, is accessible in tranches within 3 years, and its validity may be extended for another 3 years by up to 4 times. JICA said the Philippines was the first country to avail of a loan that's under the post-disaster facility. Now, as of late August, the government has raised $8.8 billion in foreign loans and grants for its COVID-19 response. So much debate on the efficacy of working from home versus the viability of health and safety protocols and going back to the office. So which one is actually more beneficial to us employees and which one is more beneficial to the firms? Well, one tech company is looking to assist in realigning with this new normal alongside providing an end-to-end automated payroll solution. We have with us Salarium CEO Judah Hirsch, live from Texas over in the United States. Good morning or good evening, Judah.
Hi, good morning, Danie. Thanks for having me.
So thanks for joining us over there. It's pretty late, but we're very, very happy to have you. Judah, just to kick off, just give our viewers here a taste of what Salarium has been all about the past, I think, 7 years since you guys have launched, and how your offerings have now evolved since this pandemic has hit.
Sure. So we've been in, as you mentioned, in the Philippines market for 7 years, providing end-to-end payroll solutions. So time and attendance, payroll, and a secure disbursement, kind of all linked together at a very, very reasonable price for businesses that might be the first time buying these type of technology solutions. Price has always been a major barrier, and so we really try to work with companies to offer these solutions at rates that anybody can afford technology. Of course, the COVID-19 crisis, I think, has affected every single company in the world, ours included. And, originally when the lockdowns first took in, the huge percentage of our customer base is in retail, is in food and beverage, is in hotel and leisure. And so, we saw the effect that the lockdown had on them, and it was quite devastating to their business. Of course, we see the payroll, we see that they had to lay off employees or cease to operate with certain employee base. And so now, we talk to them about what is really the key to getting back to work. And so, of course, safety is the number one concern, making sure that the office environment is safe and secure. And with that, we've introduced our new solution, which is FacePass. So FacePass is both a hardware and software service solution. Right? It's a biometric hardware that does facial recognition. It does a temperature check. So instead of having, the guard stand there with the temperature check gun, getting very close to you, it's not very effective, not very efficient to get a lot of employees into an office. And then even the mask checking protocols, our device is able to even decide if your employee is wearing the face mask or not. And you can have it like in our office, if the employee is not wearing the face mask, the door doesn't open. So the office door just stays locked until the employees are wearing the face mask. So yeah, it can go that far. It has, you set the temperature threshold, if employees go over the temperature threshold, it sounds like a kind of big alarm. So the guard, everybody knows, hey, this person is over the temperature. You can use that for visitors and guests as well. So it's just a very, a timely solution that we understood. We support the government's efforts to reopen the economy. We think that absolutely, it's as we ease restrictions, the IATF, like it's going to be about getting people back into the offices, back into the workplaces, back into restaurants, back into retail stores. And so, safety and efficiency is really going to be the key thing. And so to make sure that employees are going to be able to clock in safely, that it's going to be easy for the company to do and enforce these protocols. This is what we really aim to do now in the post-pandemic, and, continue to work with companies again on we support the bounce back PH movement and really seeing the economy hopefully see closer to a V-shaped recovery in the Philippines.
Okay, thanks for that information. Now let's take a step back and question why we should actually be advocating for people to be going back to the physical offices.
Sure.
I mean, you guys for sure. I mean, you're a tech company, so I'm sure you've been able to still work from home. At what point can we say, okay, we're ready and we have the safety protocols in place? And to what extent are you already confident that we can start putting such, technology in place and actually be advocating for that reopening?
So every business is different, right? Even, there's many companies that have to provide the services from their office, right? So manufacturing, I don't have machinery at my house, like to lathe a material. There's lots of support roles that some can be done from home, but security, telecommunication, like that is done better from a centralized office. Even technology companies are starting to understand that like long-term work from home, the idea that the employees never come together is not really ideal, right? And it's also not what the let's say the restriction on the office is what it's trying to enforce, right? So we do believe that what's going to be the future is a kind of hybrid. Employees are going to lots of employees are going to mostly work from home. They're going to need to come to the office a few days in a month, right, for plannings and meetings and kind of team building activities. And you're going to need a safe way to get them in and out of the office. You're going to need to be also able to track their time at home and at the office on the same system. And so this is really the need that we're having. And then, of course, for companies that just require, to operate with people physically present in the office, which is, of course, that is many businesses have this limitation.
So there's, of course, a need, nevertheless. They're essential businesses. We can't have the entire economy working from home. I agree with you on
Exactly.
that. But what is still lacking with the current protocols right now? Why is it that employees and firms still choose to have their employees back at home or working from home instead of investing in these sort of technologies, instead of investing in, disinfection and better ventilation systems to have their employees back right now?
I don't necessarily know if that's true. I think that like we have a tremendous demand. We've just launched this service and the demand is like massive from companies because companies do want to start to get back to work. I think that employees also. Of course, there are some employees that are happier from the work from home, but most employees want to go to the office sometime. They want that change of pace, right? They want to get out of their house and see other people and their teammates and be able to work a little bit closer with them, even with the protocols in place. So I do think that we're certainly starting to see this opening up. I think it's a trend. We're going to continue to see this kind of towards the end of the year. And so I do see companies now investing in these types of technologies because they understand that they need to get some employees back into the office, and even long term. Having 100% work from home is not going to be so beneficial to the company. You start to see large tech CEOs, even in Google and Facebook, Netflix, right? The Netflix CEO came out last week and he says he doesn't envision 100% work from home. It's just not. It's not something that even a big tech company like them can solely rely on because you're losing so much efficiency with people talking.
Okay, so it's not black and white here. It really depends on what the goals of the company are. What's your end goal here? Apart from it's very useful to have a tool that measures something remotely that you don't need to touch a person or physically the hassle of getting the temperature, but you're having the data of the employees, right? So the daily data of their health and even their time logged in and out. What do you hope to use this data for, and how can this data improve productivity or health and safety protocols?
So this data is already fed. So the FacePass service is the biometric device plus our cloud time and attendance solution. So that data is automatically fed into the cloud time and attendance solution for generation of attendance reports. Companies can use that, for monitoring any type of data they want. There's a lot of ways to visualize it. And then, of course, they could connect that to our payroll solution as well. They don't have to. They can certainly use just the time data. And then there is already a way to kind of tag projects, tag IDs, the work that you're working on. It is still user defined, right? So the user is telling you they're working on this project. The employee is telling you that they're working on this project. We hope in the future to perhaps have some tools or some integrations with some that kind of let the company know exactly what the employee is working on from home. That is also seems to be a big demand, right? As we shift to this new hybrid normal, I don't think we'll ever have a flag up and we say all clear back to the office and where everyone will come back to the office. At the same time, I think we understand we cannot stay locked in our homes indefinitely. We're going to need to find a kind of way to balance this and balance the safety and the needs of employees in the office.
Okay, so you're looking at not just looking at, solutions for physically going back to the office, but possibly solutions also for those that are stuck at home and continuing to work at home, looking at productivity and other issues. Now, let's talk about, you guys started as an automated payroll company.
Correct. Yeah.
Tell us about your current partnerships here, and how that has evolved right now. There are a lot of ways that you can't get physical checks anymore, and that's something
Yeah.
that you guys have been doing even before the pandemic, right?
Correct.
So you had already been advocating for cashless systems, etc. So how has this advantage been useful right now, and how are you pivoting? What's the most important things that you are looking at when it comes to the payroll systems now that it's, let's say, impossible or not really possible to be going to a bank every time and to be interacting physically with people?
So prior to the pandemic, we've already been partnered with Union Bank, who is a great banking partner for this type of fintech solutions. So we partnered together with them a while back to physically issue a Visa card with the SalPay card and connect it to our e-wallet solution. And so, of course, the growth over the pandemic has seen a lot of those digital services grow. Some of them 600, 700%. Very very similar to some of the other e-wallet providers in the country. Just as everyone is stuck in their home, we've been able to speed up the cashless movement. But for us, we're just very happy we have a good partner that understands fintechs, understands technology, startups, and how to work together with them to kind of grow the customer base. So it's so far a very good partnership.
Okay, so exciting times both from the payroll and digital transaction side, but also for the health and safety side, introducing FacePass. So congratulations on that
Thank
launch.
you.
That was, of course, Judah Hirsch, Salarium CEO.
Thank you, Danie.
Okay, let's take a quick check on the markets before I let you guys go here. We've got a couple of minutes still on our broadcast. I just wanted to see the biggest movers over in our local bourse. If I get my terminal working here, it's a bit slow. We are still trading at 5.9 levels, so not necessarily that reversal that we had been hoping for. And I just want to take a quick peek. We had mentioned industrials were bearing the brunt of that sell-off, but you can actually see here that URC is the worst performers. Take a look at my terminal. URC down by 2.1%. It's a very mixed picture with the worst performing companies. Not really very clear on who is leading those losses here, but you've got SMIC, that's a big chunk of the index as well, suffering as well. But on the other side, again, you've got AGI and San Miguel and GT Cap. So these are all companies, Aboitiz as well, that are conglos, and engaged in different types of businesses on the leaderboard. So it's not necessarily clear on what's really dragging down the board. So just a couple of other news to break here. I wanted to take a quick peek at their water concessionaires. We have not really checked in on them in a long time now. This, as the MWSS says, some good news, at least, perhaps not to our water concessionaires, but at least to our consumers of the water. Metro Manila water rates are going to be going down in the fourth quarter. That's very much related to the foreign exchange. So the MWSS approved an FCDH charge of 33 centavos per cubic meter for Manila water. That's from 48 centavos previously. So this is actually a quarterly reviewed tariff mechanism which allows concessionaires to recover the losses or give back the gains arising from this forex rate. So recall, we've got a very strong peso right now, and because of this, you've actually gotten some tariff adjustments from this foreign currency denominated loans. And finally, just a very quick check at ABS-CBN. Recall that we had said that their frequencies have been recalled by the NTC, but they are saying that will not have any additional impact on their business. That has already been disclosed, and the full impact of the non-renewal of the franchise was already discussed in a previous disclosure. So recall that the media company had said that they will be looking into other platforms. They had introduced a learning platform, an educational platform last week, and that's after in July they launched the online Kapamilya Live, so it's still live streaming its programs. They said they would continue to operate in other businesses that do not require a broadcast franchise. ABS-CBN going against the tide this morning. That's up by 2.14% to 7 pesos and 16 centavos. And that's the first look into the business day. Today is Wednesday, September 16, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel, and we are One News.